Live.
Here's the question. Is today's rally the start of March Madness on Wall Street? We're covering it all, and we're going to try to make you money here, talking about the issues. Stocks, oil, and the economy. Joining us, John Thomas Financial CEO Tom Belesis, who just returned from Saudi Arabia, so we'll get his perspective on that. PFC Energy Chairman Robin West, and Standard & Poor's Chief Economist David Weiss. Welcome to all of you. Well, listen, David, let's get right to you first. We got a good piece of economic data out this morning, but we also got lower oil prices. Give us your best guess. What caused this rally today?
Well, the rally seemed to take off this morning, but the claims data that was a lot stronger than expected sets us up nicely for tomorrow's employment report. So if that follows through with the strong gain in employment, I think you'll see this rally continuing. Oil was flat. I think there's a lot of relief there. People thought it might go up again today, but it's still over 100, so it didn't really move down significantly.
It's still over 100, but Tom, the market and the country is learning to live with $100 oil.
Absolutely right. I mean, let's look at it like this. First, make no mistake about it. The market has pulled back because of the turmoil in the Middle East. You look at all the economic numbers, they've been universally very positive here and globally. You have the Citicorp Economic Surprise Index, which is nearing all-time highs. You have the ADP employment number positive. Tomorrow is a big number, and I think if we get a positive number, we continue with this rally.
Robin, you're the energy CEO. I mean, at what point do we start to see this effect, or is it a while before this recovery starts to falter because of higher energy prices?
Well, I think the magic number is the price of gasoline, not the price of oil. And $4 gasoline would be bad news for the economy and really would start affecting discretionary spending in a lot of areas.
Of course, David, we have $4.30 gasoline in Manhattan right now, but that's an anomaly. Let me ask you about the jobs numbers, though. We had such good numbers today. If tomorrow's numbers are disappointing, I mean, are we setting ourselves up for a fall with today's numbers?
Well, that's a possibility, and certainly that happened last month when we got a very strong ADP number and then only a 37,000 job gain. So it could happen again. We're hoping we see a catch-up and we actually see a positive surprise on the employment report.
Tom, everybody was worried that if Saudi Arabia can't fill the void of the countries that have strife in them right now, if somehow oil production went offline in Libya or Bahrain or some of the other nations, then what might happen? You've just come from there. What are your observations?
You know, Liz, these are all great points, but I have to tell you, everyone in the Middle East is very optimistic for the future of what's going on in that region. I mean, you have the Gulf Corporate Council yesterday announced a rescue plan for those surrounding areas. I mean, right now, short term, it'll be risky and a little bit volatile in that market area, but overall, longer term, as opportunities emerge,
hold on one second. There's Vice President Biden walking in right now to have this discussion, David, right. And obviously, as we said, we're watching this very, very closely because it's part of our economy. It's a big, big effort that we're looking at the moment of what's going to happen with all the spending.
Robinson, I want to pick up on Tom's point for a second here because he said there's optimism right now in Saudi Arabia as we're moving forward. I was in Abu Dhabi last year, almost at exactly this time. There was a lot of optimism last year in Abu Dhabi. There was no sign at all of what was going to happen in Egypt, in Tunisia, in Libya, and possibly spilling over. So it's a day-to-day thing in the Mideast, isn't it?
Well, it's a day-to-day thing in North Africa with Tunisia, Libya, and Egypt. The Gulf is different. It's longer term. If things happen, it'll affect things slower. But one thing to keep an eye on is they're planning a day of rage in Saudi Arabia later in March. And if that should be a big event as opposed to a non-event, I think that could cause some concern in the area.
Cause some concern. And Tom, where do you see that going?
I mean, I believe that any type of concern out there in the Middle East will be an opportunity for investors here to buy stock. I mean, overall, you see the S&P 500 numbers, despite oil prices going higher,
just by the index. Listen, let me drill down because people need to be guided by a guy like you who's been successful and made a lot of money. Buy the S&P, buy an index simply, buy an ETF?
You know, I would be very selective in what sectors. I mean, energy is the sector to be. I would buy great energy stocks at any type of a pullback.
David, we had another analyst on last week. I won't mention the name of the firm that he worked for because it's one that I'm sure you throw darts at when you have the office door closed. However, he said, look, we are bound to have a downturn that will come between now and say at least the end of March, maybe sometime into April, and then things will pick up as we lead into the summer. That's the conservative approach to what's happening in the market. Do you think he's on?
Well, actually, we've been sort of expecting a correction sometime in the spring. I think March may be a little early for it, but you usually don't get a run-up like this without a correction. We're overdue for one, and I would expect a 10% correction at some point during the spring or
so you don't trust this bounce today?
Well, you know, bounces are good. High prices are nice. I like them. They make my 401k look a lot better. But at the same time, they don't last forever.
Well, it's not a straight shot ever. It really isn't. Robin, give us a sense of what could possibly move higher. You look at refiners. We haven't built new ones in this nation in a long time. We are building new nuclear plants, but I look at refiners and I think, well, there might be an opportunity because they're needed and therefore their profits might go up. Am I wrong on that, or is that a method of thinking that's actually kind of right on the money?
Well, the refining business is a tough business. We have spare capacity and falling demand. So depending on the price of the company right now, this is, you know, I would only move into the refining sector if prices were very low. The service sector is still very, very strong in the U.S. And the onshore oil business is also very, very robust. And there's some huge plays. There was a story on the front of the Financial Times today. U.S. production, oil production, is actually up in the United States. This is for the first time in a long time. So those are two sectors I'd look at closely.
Tom, what about Saudi Arabia? They are now pumping about 9 million, just under 9 million barrels a day. They say they could up that to 12 million if things really got tough in places like Libya. But some people doubt that. Eric Bolling is wondering, geez, maybe they'd be lucky to get up to 10 million barrels a day.
No, I think they're going to keep increasing production to really stabilize the turmoil out there, and that's going to affect us here. So,
but are they at capacity already?
No, they're not at capacity. I believe they can pump out more oil. I think they're going to pump out more oil. I think there's no question that the opportunities here and abroad are there right in front of us, and we have to take advantage of what's happening out there now on a longer-term perspective.
David, I know we're jumping around from Saudi Arabia back to the U.S. and back, but bringing it back home again, we get the jobs number for the month of February on Friday. What are you expecting?
We're looking for 170,000. We didn't revise it up with the ADP report because it's been so misleading in recent months, but I wouldn't be shocked at an upward surprise.
An upward surprise. Robinson, we have had sort of a jobless recovery over the past year. Are we in step now for some kind of job recovery that will change significantly the unemployment figure?
Not that I see. But again, I focus on the oil sector, and the challenge in the oil business is actually finding qualified people. We have lots of slots that are open. We can't fill them.
In what areas specifically?
In exploration, production, and again, there's sectors of the industry that are booming, and we don't have people who are technically trained and mobile who want to take these jobs and move.
Tom, what Robin's been saying is that, you know, we're actually increasing oil production here in the United States. Coming from an oil guy, I find that interesting to see. You said buy energy names on a pullback. What else? In the equity space, do you like tech?
Yeah, selective technology. You got selective healthcare companies out there, but I think primarily you have to go with the trend. The trend right now is energy and selective technology. Those are the areas to be.
By the way, Robin, I just want to pick up on something you said. Patrick Byrne, we had him on the other day, Overstock.com chairman and founder. He said the best investment you can make right now is education. Educating yourself to become part of that sort of explosion that you've been talking about.
Absolutely. You know, we have to build human capital in this country, and if we don't, it's going to be increasingly difficult for us to compete.
Robin, thank you so much. Robin West, Tom Belesis, and David Weiss. Here's what's still ahead on Bulls and Bears.
A short-term budget fix.